Welcome back to Digital Wealth Code. This week is shaping up to be one of the most important weeks for the market. We've got massive earnings, a key Federal Reserve meeting, and growing shutdown risks, all at once. Any one of these can move markets. Together, they can cause serious volatility. So today, we're breaking down what's happening, why it matters, and how it could affect your money. Before we jump in, quick disclaimer. This video is for educational and informational purposes only. I'm not a financial advisor, and this is not financial advice. Always do your own research and consult a professional before making investment decisions. All right, let's get into it. Right now, the market is sitting at a crossroads. Investors are optimistic, but also extremely cautious. Inflation has cooled, but interest rates are still high. Economic growth is slowing, and consumer spending is showing cracks. At the same time, expectations are still elevated. That's what makes weeks like this dangerous. Small surprises can create big reactions, and large surprises can completely shift market direction. Let's start with earnings season. This week, we're hearing from Tesla, Apple, Microsoft, and Meta. These are not just popular stocks. They make up a massive portion of the S&P 500 and Nasdaq. When these companies move, the entire market feels it. Investors will be watching revenue growth closely. They'll also be watching profit margins. But most importantly, they'll be focused on guidance. What these companies say about the future matters more than what they did last quarter. Apple gives insight into global consumer spending. Microsoft and Meta tell us about enterprise demand and advertising strength. Tesla gives us a read on manufacturing costs, pricing power, and consumer confidence. Even strong earnings can lead to selling if guidance sounds cautious. And weak earnings can accelerate sell-offs very quickly, because these stocks are heavily owned by institutions. Next, let's talk about Tesla specifically. Tesla is more than a car company. It's a sentiment stock. It reflects risk appetite, growth expectations, and interest rate pressure. Investors will focus on vehicle deliveries, profit margins, and pricing strategy. Any sign that demand is weakening can hit growth stocks across the board. But if Tesla surprises to the upside, it can lift the entire tech sector. Tesla earnings often act like a temperature check for the market. Now let's shift to Boeing. Boeing may not be flashy, but it's extremely important. It touches industrials, defense, manufacturing, and global trade. Boeing's earnings help tell the story of supply chains and production stability. If issues continue, it raises concerns about broader economic weakness. If things improve, industrials and defense stocks could benefit. This is a reminder that not all market signals come from tech. Now let's talk about the Fed. Even if interest rates stay the same, this meeting matters. Markets don't trade on decisions alone. They trade on expectations. Every word from the Fed chair will be analyzed. Phrases like higher for longer or persistent inflation can move markets instantly. If the Fed sounds hawkish, growth stocks could struggle. Bond yields could rise, and defensive sectors may outperform. If the Fed sounds more optimistic, risk assets could rally quickly. Tech, crypto, and speculative stocks tend to react fast. This is why Fed weeks are often volatile. Now, add government shutdown risk into the mix. Markets hate uncertainty. Shutdown headlines increase volatility even before anything actually happens. Defense contractors, government services, and federal spending sectors can see pressure. Consumer confidence can also take a hit. Even if a shutdown is avoided, the uncertainty still affects sentiment. This is where everything collides. Earnings, interest rates, and political risk all at the same time. Strong earnings can sometimes overpower macro risks. But in weeks like this, macro headlines can override good results. You might see stocks beat expectations and still sell off, or mixed earnings followed by a rally because of Fed optimism. That's why this week isn't about predicting one stock. It's about understanding risk. For long-term investors, this is a reminder to focus on fundamentals. For traders, risk management matters more than being right. Volatility cuts both ways. So the big question is simple. Do earnings carry the market higher? Or does uncertainty take control? Let me know in the comments if you're bullish, bearish, or staying on the sidelines. If you found this video helpful, make sure to like and subscribe. This is Digital Wealth Code, and I'll see you in the next one.